and welcome to today's video, which is called To Gloomy S&P 500. Yes, this is my medium-term view that too much risk aversion has crept into the markets. So, I hope that you are already subscribed on my site, subscribed to this channel, and interacting with me on Twitter and making the most of the newly upgraded Telegram, which I'm utmost happy to be bringing you with them together. So, let's start with the big picture when it comes to stocks, and let's concentrate on Friday. We got two basically Middle East events when Israel was suggesting that Gaza civilians evacuate, and Iran vowing response to any escalation and incursion. We also got weak consumer confidence data undershooting expectations. That's one thing. Nominal and real retail sales are another, and for now there is no steep deterioration in days. Inflation expectations, though, have come above expectations, and that's a longer-term problem. But markets remained focused on the approximately 7 Fed speakers over the last 2 weeks that have, in other words, reassured about us being at the very end of the rate raising cycle, and they were sounding more in preference of keeping rates elevated. Anyway, the odds for rate raising had been sharply dialed down over this week, and currently even December FOMC has only 30% odds, meaning that the Fed is likely at the end of its rate raising cycle, and this brings generally positive consequences for stocks, which is another fundamental and historical reason why to disprove all the pessimism that is already now priced in. We are going to have a good fourth quarter, and it's going to be led chiefly by tech and semiconductors. These have been badly beaten down Friday, together with communications, where I see them more on the underperforming side. The breakdown, for example, below the 200-day moving average in Netflix is not at all encouraging or boding well. But Friday we saw both utilities and consumer staples do well, and all the safety trades from US dollar to gold to oil and long-dated treasuries appreciate, some more, some less, volume varied, but I'm taking on this information within the nearest daily analysis within the market sections, just the way that premium clients are used to. Industrials, these are still long-term bullish, similarly to tech, and as regards financials, the big banks versus regionals divergence shows that there are quite some downside risks, and as I had tweeted earlier this week, it's that those unrealized losses within the banking sector, they are approximately back there where they had been in March. So the yields pressure is still to keep biting, but for now yields would retreat, not just based on recession, which is not yet near, but based on geopolitics. So let's move into the daily chart. The daily chart shows reasonable volume, quite some buying towards the closing bell yesterday. Stocks returned over 4350, but 4365 where 4365 level was with ease broken during the day on bad fundamentals and bad geopolitical news. But it would be overcome with ease. The greater resistance is to be found at 4392, which was rejected on good banking earnings early Friday, which could have lasted longer, but then the spate of bad news already mentioned hit. We are going to see tech leading S&P 500 higher, and when we see Russell 2000 bobbing at the, say, horizontal support, if it joins in the upswing and is not lagging behind, that would be a fine confirmation. And when it comes to the final big question, whether we still have to see some kind of a capitulation, or whether this correction of the prior lows that were reversed on the non-farm payrolls day is over, I'm leaning towards the correction being slowly over, and us seeing higher prices in stocks, no matter the for now still reasonably contained. Yes, I'm aware of, and this is being recorded after the Damascus and Aleppo airfield news. This is still relatively contained, and unless it starts spiraling out of control, stocks would once again return focusing on the US economy and on yields, which would be constructive for stock market buyers. So that's my larger perspective, and obligatory disclaimer, wishing you a fine rest of the weekend, and let me know your thoughts.